Hi, I'm Steve Strazza, and I'm here with JC Parets, founder of Allstarcharts.com. Today we're going to talk a little bit about European stocks. JC, the Swiss market index just broke out of a 12 to 13 year consolidation. It looks a lot like US equities did back in 2013 when they broke out of a 12-year consolidation. Does this mean Europe rips and the rest of Europe follows Swissy? Or what are you seeing out there?
It's interesting, right? Because it's the first one that breaks out of these European stocks. I mean, it's just been such a struggle out there, both on an absolute basis and on a relative basis. Like, just new lows on a relative basis. Just been an absolute mess of a trade. But what's interesting is that I think, and some of the conversations I've been having lately, I think it makes a lot of sense. It's really the components of European equities. A lot of banks. They don't have the exposure to technology that the United States has, right? And it represents almost nothing. It's like materials for us, right? It's irrelevant. They got a ton of banks and the banks aren't working. So because our banking sector is a much smaller component of our indexes, we've benefited from the strength in tech. There's no doubt about it.
So then what do you make of the strength from the Swiss market index? Because a lot of people look at Switzerland as some sort of financial hub, especially in the Eurozone. Do they not have that same sort of weighting towards financials that the rest of European countries do?
Look again, they got a ton of healthcare.
Okay, that makes sense.
Yeah, doesn't it?
So are you expecting a scenario where the rest of Europe catches up with Swiss markets, or are financials going to weigh on the rest of these indexes like the DAX and Stock 600 and drag them down ultimately?
I think that's the story, right? So at the end of the day, it goes back to the interest rate story. If rates continue to get slammed, financials are going to underperform, and we're not getting any breakouts in Europe anytime soon. That's just what it is. So it's more of a think about what's inside these indexes. Like, it's not just, hey, JC, what did the Dow do today, right? Like, there's a lot more going on. It's a little more complicated than that. So breaking things down to more granular levels and, incorporating that top-down approach, right? We start with the indexes, work to the sectors, the industry groups, and ultimately to the stocks themselves. I think that that's our strategy always, but I feel like that shines more than ever in this particular situation.
So what are you seeing, what are you looking at in particular to gauge the performance of European financials? I know that there's an ETF in the US, EUFN. What else are you looking at there?
So EUFN is the way to play it, but it really is more the underlying index behind the ETF, right, that we want to pay attention to, and not just the ETF on its own, but on a relative basis. I think it made, my math is correct, 16-year relative lows. Financials relative to the rest of Europe, terrible. So I think that until that turns, there's no reason to expect that breakout. Now, I'm in the camp, and I've been in the camp, that what we've seen in Europe going back to the 2000 peak, 2007 again, the way I see it, the tests of this overhead supply, the tests of resistance are coming sooner and sooner, right? So to me, that combined with maybe the higher lows that we've also seen over the last decade, I think that's the buyers being less patient with each go around, and ultimately we do get that breakout. I mean, that's how I see it. It's either that or this is a massive top, and I don't see it that way. I look at it more like the 90s was killer. It's taken a couple of decades to digest those gains, and we are most likely, upcoming to the beginning of a new secular bull market. I mean, that's what we're seeing. We haven't seen it yet, but I think the strength in Switzerland breaking out already out of 12-year base. I mean, that's not a negative towards Europe. I would look at it maybe as a leading indicator more so.
So we're going to need financials to participate if we're eventually going to get this upside resolution. Do you agree?
That's what it is, but it's an interest rate story. Rates all over the world are going down, right? We have that chart that just shows it's not a US thing. Rates all over the world, they're all going negative. So banks aren't going to do well in that environment, particularly on a relative basis.
So you're anticipating that eventually rates will find footing somewhere and bottom, revert higher, and that will kind of be what sparks the breakout that we eventually get?
It's hard to make that bet today, Friday, August 9th, that we're recording this, right? It's hard to make that bet right now. I think there's some interesting data coming in that suggests maybe we're near a turning point, but price at all has not acknowledged any of this data. So I don't think it's wise to sort of bet on that today with the data we have. But I think as more data comes in, I mean, yes, I think that is certainly a possibility that rates are going to find footing somewhere, right? But that doesn't help anybody. Well, yeah, of course they're going to find footing at some point, right? It just, it does, I can't tell you where. We're kind of in no man's land right now.
So when I look at like the individual bank names, whether it's Spain, the UK, Lloyds of London, Deutsche Bank, Credit Suisse, they look terrible individually. A lot of them are breaking to new all-time lows. What do you make of that?
I mean, that's just consistent with everything we've been talking about. European banks are literally making the lowest lows on a relative basis since 2002 or 2003. Go back and look at the chart. Something like that. It's a long time, needless to say. So the fact that all these European bank stocks look like crap, I mean, right? Those are the components of the indexes that just keep making new relative lows. So until that turns, we can't expect these European indexes to break out either. And until rates find footing, it's hard to expect the financials to get going in the US or otherwise.
All right, so we'll follow up on this soon. As soon as we see yields finally try and find their footing, we'll see if financials can catch a bid and lead these European indexes higher like the Swiss market index.
Talk to you next week, Straz.